Guys, this is S&P 500 weekly technical analysis for the week of April 14th. It will be a short week only from Monday to Thursday, and the Friday, April 18th, will be the holiday. Now, this wild movement you are seeing in the market, and if you are thinking that everything is good, everything is well, and the market is going to enter into the bullish trend, then no, absolutely not. Because the damage is done. The market has already started its recession cycle. Last week we have seen very heavy volatility in the market that the S&P 500 on Wednesday gained approx 11% intraday. And one more thing guys, I agree that because of this heavy volatility in the market in the previous week, very heavy volatility, my accuracy has dropped to 80%. So when I say the accuracy through these daily precise updates, which I give to my Patreon community members every day, it has dropped to 80%, which otherwise every day on the daily basis is more than 90% or 95%. So let me tell you that when I say that accuracy has dropped to 80%, what does that actually mean? For example, yesterday if you notice, it came down to what? It came down to 5221. That was the low, okay, and the high was 5381. And in my pre-market analysis yesterday on Friday, what I predicted is that S&P 500 is expected to trade in between 522x, okay, in the bottom side, in the lower side, and 529x in the bull side. And if the situation improves and if it gains 529x, then S&P 500 will be heading to 536x. And then in my midday update, I mentioned that now the S&P 500 is expected to trade in between 5264 and 536x/7x. The lowest for the day, okay, it was there, and then high it hit 5381, whereas I was anticipating maximum of 537x. So in this manner, there was a little drop in the accuracy. Otherwise, the movement was as expected, as anticipated. Similarly, if you notice, on 8th of April, the high was 5267, right? On 8th of April, that was Tuesday. High was 5267, and then intraday there was a 4% fall. This was my pre-market analysis, which is given 1 or 2 hours before the open of the stock market. What have I mentioned here? The bullish movement will be limited and will be restricted to 5264 irrespective of any open or at any open price or so. So even before the open of the stock market, I mentioned bullish movement will be restricted to 5264. Question is why? What is this 5264? This 5264 is my calculated support and resistance level. On that day, it was acting as resistance. And what do you see on Tuesday? The high was 5267. It breached only by 3 points, and then there was intraday heavy fall. On Wednesday, the market was moving around 5100 before the information came from the president that there will be a pause on the tariffs for next 90 days. Market was trading around 5100 or 5130, 5140. So in my pre-market analysis on Wednesday, then in my important update on Wednesday, then in my comments on Wednesday, then in my midday update on Wednesday, again and again I have repeated that 5120/33. Okay, you can see it here, 5120/33. Okay, it will be there in the bullish side provided that the S&P 500 is holding and sustaining above the 507x. Okay, once it sustains above 507x, then there will be the possibility of this, the 512033, and also it will remain in the bullish side. The bearish side will be over. This was before the comment or before the post or before the information came to the market that the president is going to pause the tariffs on these countries. Even before that, it was bullish. It was sustaining at our levels. So we were also bullish. Okay, there was no question of the bearish movement. Bearish movement was over by that time. And then came this very heavy bullish movement. So in this manner, the accuracy dropped to around 80%, okay, during this the heavily volatile environment, but we were in the winning side. This is the most important part. So guys, if you also want to join my Patreon community, I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the agenda of this S&P 500 weekly technical analysis. And the first point of the agenda is the S&P 500 technical analysis on the weekly chart. Weekly chart, the trend is now bearish. Okay, no doubt about that. That is why I am saying the damage is done. Okay, in order to bring back the things to the levels as they were, a lot of support, extraordinary support is required from the executives and from the Feds. Okay, and this is least likely to happen in the current situation, in the current scenario. Even if they want to, they cannot. Okay, that is why the market has entered into the recession cycle. The economy has entered into the recession cycle. Okay, and I will and also here I will show you the charts of oil and gold. Yes, gold. I will show you the charts of gold, okay, and the oil, and I will help you understand, okay, why along with the technicals, numbers and the indices S&P 500, Dow Jones, Nasdaq, okay, then the gold and oil, why I am saying that the market has entered into the recession cycle. Okay, so weekly chart heavily bearish. S&P 500 is now moving up to fulfill its technical obligation to the moving averages. Okay, this is exactly what I mentioned in the previous S&P 500 weekly technical analysis also. Second point of the agenda is the S&P 500 technical analysis on the daily chart. On the daily chart, what we can see here is that it is absolute bearish. Okay, it is now trying to move up fine. It is struggling to clear the moving averages. That is why yesterday I mentioned that now the bullish side will be limited to the 5, 3, 6x, 7x. That's it. Okay, because my calculated resistance was there and then the moving average was there. And you can see it by yourself that yesterday it failed to move up beyond this small zone, and eventually it closed in 536x. Okay, similarly I will tell you on the daily chart, okay, how exactly it is going to work, what are the levels, the next moving averages or so. Now comes the third point of the agenda. Here I will give you the probable movement of the SP500 from April 14th, which is Monday, through April 17th, that will be Thursday. Friday will be the holiday, Good Friday. Okay, so it will be a short week only for 4 days. And if all goes well, then there will be the bullish movement, and then by Thursday we can expect some fall, some limited fall. Okay, otherwise it will try to move up and then we'll find heavy resistance at the moving average and the calculated level, and then we can see some fall. Okay, so that I will discuss in this, the third point of the agenda. And guys, once again, all of these three sections are interrelated, are interconnected. This is why when I say the probable movement, by the time I come to discuss the point number 3, I have already discussed 30 to 40% of the probable movement in the first and the second point of the agenda. This is why it is highly recommended that you should watch all of these three sections in order to understand what is going to happen in the market, in the entire market in the next week, why that will happen and how that will happen. Now guys, I am going to discuss the first point of the agenda, and this is the weekly chart. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. Okay, and if you notice this, the last candle, it's a heavy bullish candle in a manner that from the low to the high it has gained 13%, 13.5%. So this week was heavily volatile, right? Now let's first discuss this, the last candle. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then hit like to appreciate. Now the last candle, it's a very heavy bullish candle, but the closing of the candle is not very near to or equal to the high of the candle. Okay, number 2, the closing of the candle on the daily chart was below the moving average. All of this indicates that a gap up open cannot be confirmed. Okay, but yes, irrespective of any open, there will be an initial or intraday bullish movement. So in the previous S&P 500 weekly technical analysis, what I mentioned that on Monday, on the previous Monday, on April 7th, there will be a gap down open or irrespective of any open, there will be an initial or intraday bearish movement. There was a heavy gap down open. Okay, so that technical condition fulfilled. But in this case, the gap up open cannot be confirmed. Now let's verify the same through the Dow Jones. Dow Jones exactly the same condition. Okay, no change. In the Dow Jones also, if I show you the daily chart, then also the closing is below the moving average, right? Exactly the same condition. Now one more thing, because of this heavy bullishness, this heavy bullish candle in the Dow Jones, in the Nasdaq, in the SP 500, okay, market is now in a condition to sustain and to hold bullish. Even if there comes a fall, then also the fall is expected to be limited and the market will remain recoverable. Okay, it is clear through this the candle. Now let's talk about the technicals. In terms of the technicals, what you will notice, moving average is clear fan out, okay, bearish. S&P 500 is bearish on the weekly chart through the moving averages. S&P 500 is bearish through the Bollinger Bands on the weekly chart. S&P 500 is neutral through the Ichimoku cloud on the weekly chart. S&P 500 is bearish through the MACD on the weekly chart. S&P 500 is a little bullish through the stochastic RSI, okay, but still it is in the bearish zone, okay, so a little bullish only on the weekly chart. S&P 500 hit the absolute saturation and the oversold and other conditions last week, but because of the formation of this bullish candle, okay, so what I'm saying is that because of the formation of this bullish candle, the S&P 500 came out of that heavy saturation. This is why on Tuesday and Wednesday, we all remember that it moved up and gained 11%. But Tuesday on Wednesday, technically it hit the saturation, and I think on Wednesday it hits the absolute saturation. Okay, because the K equal to D equal to was absolute zero. That is why again and again, even in my pre-market analysis, my comments, my initial important update, again and again I've repeatedly mentioned to my Patreon community members that now the market is ready for a bullish retrace. Sorry, not a bullish retrace, but a good bullish retrace. This can happen anytime, any moment. Okay, and when the market moved up, regained the tiebreaker, moved up, and was trading around 512033. Okay, then came the news and then it moved up. So now all of this indicates that the S&P 500 is now 75% bearish on the weekly chart. Okay, let's analyze the Dow Jones. So exactly the same thing is there in the Dow Jones. All of the technicals are in the exact same manner. Dow Jones is also 75% bearish on the weekly chart. 75% bearish means the trend is shifting to bearish, although it is not 100% absolute, but the trend, because there is a confirmed crossover in the moving average. So trend has already shifted to the bearish side and the market has entered into the recession cycle. Now the rule that I was talking about, okay, the rule says that the market should, after there comes a bearish crossover in the moving averages, the market should retrace back and test the moving averages, and also it is allowed to breach the moving averages a little. Okay, but until and unless there comes again a bullish crossover in the moving averages, it will remain absolute bearish. Okay, last week also I have shown you this, the same condition that was seen in March 2022. Okay, so what happened in March 2022, 3 years ago? In March 2022, there was a confirmed crossover in the moving averages. It came down and then suddenly it moved up, heavily moved up. For 2-3 weeks, it was bullish. When it was kind of, there was a situation that now the moving averages will give a bullish crossover and then everything will go bullish and bullish. Then came a bearish candle, normal bearish candle. There was a slip, then 20% fall. So see, this is nothing new. It always happens during the correction and during the recession cycle. So it is nothing new. Okay. We know that this happens, okay, and it always happens. So in the similar manner, the S&P 500 is now moving to the moving averages, the cluster of the moving averages. And from the recent closing, we can see like 6% movement can happen. 6% bullish movement. Okay, one more thing. The name is moving averages. Moving. Okay, it is moving. This means that the moving average next week will further come down. As of now, the moving averages are in 5-6xx range. Next week, it is expected to come down to 5-5xx range. And if the S&P 500 fails to hit the moving averages next week, because it will be needing around 4% bullish movement from now, so that it can test the moving averages. If it fails to give 4%, then there will be one more week. That will be the week of April 21st. In the week of April 21st, moving averages will further come down to around 5-4xx. Okay, and then the S&P 500 will test the moving averages in 5-4xx or around 5,500, you can say. Okay, so within 1 to 2 weeks, it is expected to test the moving averages to fulfill its technical obligation. Okay, remember, this is the rule of the market. This is a technical rule. It is actually a blessing in disguise. On Wednesday, what happened? On Wednesday, the market manipulators, okay, they gave you an opportunity. They gave us all an opportunity. Okay, this or opportunity, or you can say it was a blessing. It was a blessing from the market manipulators. Blessing in disguise, because now the market is moving up. Then what will happen? When it moves up, then at some point it will struggle. It will struggle heavily. There will be a bearish slip in the moving averages. It will fall heavily, 20% fall. This means that those who have missed the bearish cycle here, okay, they will now get a golden opportunity here to enter bearish and then wait for 15 to 20% fall, right? That is why I say that recession is the best time. It is the best time to make money, because during the recession there will be heavy fall, heavy bearish candles. Okay, now let me show you one more thing. Okay, and it is related to the gold and the oil. Okay, let me help you understand that why I am again and again saying recession cycle. Now this is gold. Okay, so what we know about the gold? Okay, the paper money that we have, it is the fiat. It is the fiat money, means its value is there as long as, and the government is allowing the trade or is accepting. Okay, this is the paper money. Okay, in many countries we have seen that the government has suddenly banned the paper money. Okay, and then restarted or reissued some other paper money. It has no intrinsic value. Its value is there as long as the government is there. It is stable, everything is going well, and people have the faith in the government and the money. Okay, so this is how it works. Gold is something that we know that for thousands of years, okay, gold is the standard form of money. Okay, no matter what happens in the economy, the market, okay, trade war or the real war, or doesn't matter what is happening, the value of gold will not change. The question is that why I'm discussing the gold here. Reason is that hedge funds or the big players, okay, the family offices, means the companies, okay, the organizations, okay, or the people who have hundreds of billions of dollars. Okay, what they do, they either invest in the government securities where the percentage returns are fixed, okay, or they buy gold, because it doesn't matter whether there will be a recession or something worse than recession. Doesn't matter, the gold is extremely safe investment. So what is happening is that there is a huge demand for the gold. Okay, they are hedging. Okay, they are buying the gold for the security. Okay, and now this is a chart of gold. Okay, you can see unidirectional movement in the gold. Okay, and yesterday the gold again hit a new, or has formed a new all-time high. Okay, 3,245. Okay, dollars. This was the new price. Okay, per ounce. So what you can see here is that when everything goes well, okay, like what happened is that during the bullish cycle, okay, again let me show you. This was from mid of again this was 2020. Okay, that time it was COVID. Okay, and everything slowed down, market came down. There was a brief recession, a very brief recession for 2 months or so. Okay, gold, the demand of gold skyrocketed. right? Okay, and when everything came back to normal, stock market started to move up, entered into the bullish cycle. Okay, demand of gold decreased. Okay, and then from 2000, mid of 2020 to around 2023, before, yeah, by the end of 2024, the gold was range bound. Okay, in last 3 years it was range bound because the stock market was actually bullish. So this unidirectional movement in the gold, okay, heavy bullish movement in the gold, okay, this indicates that there is heavy fear in the market, extremely heavy fear. When I say that in the market, I mean among the big ones. Heavy fear among the big ones, that recently, even after the comment of the president that there will be the pause for 90 days, they are not buying it, they are not trusting it. Okay, that is why yesterday we have seen again a very heavy bullish movement within 1 week, very heavy bullish movement. Because if they would have trusted the president on his remarks on 90% pause, sorry, for 90 days pause, and if they would have estimated that now everything will go bullish, will fine, then definitely there would have been a heavy fall in the gold. Rather, there was a heavy rise in the gold. Okay, so this itself is very, very significant, right? This was gold. Okay, heavy bullish movement in the gold means fear in the market, fear in the economy, fear among the big ones. Now comes the oil. This is the weekly chart of oil. Okay, now why oil? Okay, gold and oil, okay, these are the benchmarks. Now, what happens is that when there are the fears, the correction fear or the recession fear, then what happens? Oil price come down. Okay, why the oil price come down when there is a correction of the recession fear? Okay, the problem is with the demand, because when there comes a correction or the recession, correction is fine, go, okay, oil can manage, but when there comes a recession, okay, then the demand will come down heavily, there will be heavy decline in the demand. Then there will be less shipping in the form of like the land transport, sea to sea transport, air transport. Okay, and then when the demand decreases, then everything will slow down, the demand of oil will decrease, everything will slow down. Okay, that is why I think last week or last week I mentioned that if the oil trades below 65 dollars a barrel, then it will be confirmed that the market is going to enter into the recession. Last week, the oil came down to $58 per barrel. Okay, this the brief relief in the oil is because of the recent announcement of 90-day pause. So now the factories in the other countries, they will try to fulfill the orders. There will be heavy sudden spike. I repeat, the damage is done. So in this manner, the gold, okay, bullish movement in the gold and bearish movement in the oil. Okay, so we cannot simply rely on just one, only on gold and or only on oil. Okay, it can give us false reading, but when we combine both of these along with the stock market, the technical, then it gives us a very, very clear picture, very, very clear idea what is going to happen. Okay, now in the S&P 500, as I mentioned that S&P 500 will be moving up. Okay, but this movement is a blessing in disguise. This upward movement is a blessing in disguise because it is not confirming a bullish movement, bullish cycle. Rather, it will give you an opportunity, once in a lifetime opportunity to go bearish. However, through the technicals levels, we knew that this is the saturation. This is the point of saturation. Okay, there will be the reversal from now. Similarly, when it moves up, then through the technicals levels, okay, we will come to know, okay, there is a saturation, heavy saturation, and there is a bearish slip, it will come down. So knowing the trend, okay, the movement, it is not a magic. You just need to know how the stock market works. Very simple. And guys, for that, this is my S&P 500 knowledge transfer program. So if you want to learn everything about the stock market, the movement through the technicals, the levels, the trap, okay, the potential opportunities, the hack, everything, that is there in this program. Whatever I know, whatever I have learned in last many years, okay, so I am going to teach everything here through the program. This program will help you trade confidently during the recession cycle. While the others are going to lose, you will be one on the winning side. And it is not just for the recession cycle. Okay, but once you learn then it will be with you forever, okay, for the years to come. And then you need not to depend on anyone, because you will know, okay, how the stock market works, the modified technicals, the options trading strategies, all of the trading strategies, my own calculated support and resistance levels, okay, how to know the limits even before it happens. So on Tuesday I mentioned 5264 will be there. This will be the maximum that the S&P 500 will achieve, and when S&P 500 moved up, it hit 5267, okay, it breached 5264 only by 3 points, and then there was a 4% intraday fall. So how to know the exact limit, that it will reach to this point and then there is nothing else, and then it will drop, or it will reach to this point and then there is nothing else, it will move up, okay, everything here. Then how to deduce the trend, how to recognize the trend, the change in trend, okay, everything, how to recognize the manipulation, and how to avoid falling into the traps, how to convert the trap into the opportunity, then the hacks, intraday hacks, short term hacks, long term hacks, okay, everything. Then there are some important terms and conditions, very simple. This is my email address. Whenever you want to participate, or if you have any questions, you can send me the email. And then these are the snapshots of the meetings, and in this Google spreadsheet I have mentioned my email address here and here, okay. So if you have any questions that you want to ask, or whenever you want to participate, you can simply drop me an email. So I've given the link to this Google spreadsheet in the description of the video and also in the comment section. And on my Patreon page, in the shop section, you will find, okay, some of these are products. These are very specific. This is the 8 hacks plus modified technicals. This is the 4 stock market hacks, and this is the options and options trading strategies and the premium calculator. So if you only want to learn the hacks, these hacks works with almost 100% accuracy and almost 100% of the time. Similarly, that options trading strategies or the trading strategies, this works almost 100% of the times with almost 100% accuracy, okay. Whenever you want to participate in these programs, then you can visit my Patreon page, okay. I've given the link in the description of the video and also in the comment section, and under the shop section you will find these programs. Now guys, I am going to discuss the second point of the agenda of this S&P 500 weekly technical analysis. And here in the second point of the agenda, okay, I will do the technical analysis on the daily chart. This is the daily chart. Daily chart means one candle represents one day, not 1 week or 1 hour. One candle means one day. Now, let's first analyze the candle. So it's a bullish candle, and the good thing is that the closing of this bullish candle is above the open price of the previous candle, because the previous candle was in open equal to high condition. So there was very heavy pressure. But because of this, the closing above the previous candle, the open and the high price of the previous candle, market has regained the bullish sentiments. The only problem is the rejection or the closing below the moving average, okay, but that's fine, because this will be countered by, or this will be cancelled by the condition that it closed above the previous candle, okay. So in this manner, the bullishness is there, but this does not confirm any gap up open. This simply indicates that irrespective of any open, there will be an initial or intraday bullish movement. That's it, okay. Now the last candle of the Dow Jones, okay, exactly the same candle, the same manner, because on Thursday it was in open equal to high condition, but yesterday it closed above the open and the high of the previous candle, especially breaching or the cancelling the bearish impact of the previous candle, okay, but below the moving average. That is why a gap up open is not confirmed, okay, but irrespective of any open, an initial or intraday bullish movement will be there, okay. This is very much clear with the candle. Now if I combine this, the analysis of the candles on the weekly and the daily chart, what we know is that on Monday, irrespective of any movement, there will be an irrespective of any open, there will be an initial or intraday bullish movement in the entire market, including the S&P 500, Dow Jones, Nasdaq, and in the entire market. Now let's talk about the technicals. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. Now let's discuss the technicals. Here fan out in the moving averages. So S&P 500 is bearish through the moving averages on the daily chart. S&P 500 is bearish through the Ichimoku cloud on the daily chart. S&P 500 is bearish through the Bollinger Bands on the daily chart. Some improvement here, but it is still the S&P 500 is still bearish through the MACD on the daily chart. The stochastic RSI is bullish. Okay, so it is clearly S&P 500 is bullish through the stochastic RSI. Okay, and if you notice that here on Tuesday and Wednesday I was saying that it has hit the absolute saturation, absolute oversold and everything. Okay, so you can see through the technicals it hit. That is why I mentioned to my Patreon community members, market is ready for the bullish to trace. It can happen any moment, anytime. Okay, and then the technicals, the levels, a tiebreaker further cleared, and then his comment. Okay, his update, the update from his side that there will be a pause. Okay, for 90 days. So in this manner, the S&P 500 is 90% bearish on the daily chart. Let's talk about the Dow Jones. Exactly in the same manner, the Dow Jones is bearish through the moving averages on the daily chart, bearish through the Ichimoku cloud on the daily chart, bearish through the Bollinger Bands on the daily chart, bearish through the MACD on the daily chart, but bullish through the stochastic RSI on the daily chart. Saturation and everything was there on Tuesday and Wednesday. Okay, so this means Dow Jones is also 90% bearish on the daily chart. Now what we know is that the S&P 500 and Dow Jones both are 90% on the daily chart, 90% bearish. Okay, and also are 75% bearish on the weekly chart. What does this mean? This means that the market is bearish, absolute bearish. Whatever you are seeing here bullish, okay, it is just an opportunity to go bearish, simple. Everything is bearish. Okay, and if you think that this bullish happening, okay, no, this is absolute bullish. Okay, if you have very little idea of the stock market and if you are assuming it will go bullish, then the basic movement of the stock market says, just the basic movement, okay, it says that whenever the market comes down, okay, it can come down to a level only. Okay, when the technical saturate, then it will be compelled to move up. Okay, whenever the technical saturate, it will be compelled. So this is the natural movement of the stock market. Yes, I agree that market manipulators, okay, they manipulate the market, okay, times, just like what we have seen on Wednesday. But this manipulation was aligned with the technicals. Okay, so it was supposed to move up to like 2512033. Okay, but then it moved up heavily. So it was already in the bullish side. So the manipulation happened in this the bullish retrace side, which was already there. Okay, so that is why it was a blessing in disguise for the bulls and the bears. For the bulls means it was moving up. For the bears, it is a blessing in disguise because it is now moving up. Okay, will form a lower high and then a fall, 15 to 20% fall. But guys, you need not to worry about the bullish movement, bearish movement, trap or anything. Okay, because I give these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire market every day from Monday through Friday, Monday, Tuesday, Wednesday, Thursday, Friday, to my Patreon community members. You can join my Patreon community and you will be getting these daily precise updates of the S&P 500 and the Dow Jones. Okay, what is happening, why that is happening. So these daily updates in a manner that I give the pre-market analysis before the open of the stock market, 1 or 2 hours before. And then comes the midday update. Midday update is given 3 hours after the market comes into the session, around 12:30 p.m. Eastern time. Okay, and it tells you what is going to happen in the market in next 3 to 4 hours or until the closing. Then comes the final update. I give the final update 1 or 2 hours before the closing of the stock market, so that my Patreon community members can prepare for the next day or the days. And guys, it is not just about these daily precise updates which I give to my Patreon community members, but I also give the stock market opportunities in the premium stocks of the US stock market, minimum 5 to 10 opportunities every week in top 30-40 companies of the stock market, US stock market, the blue chips. And that's not all, because I also give this the S&P 500 midweek update every Wednesday or Thursday, and this is a video technical analysis wherein I discuss all of these the cases, bullish, bearish, along with the exact numbers, levels, that it will come down to this level, then it will, or it will move up to this level and then it will fail. Okay, this will be the bearish side, this will be the bullish side, okay, in a very specific manner. So guys, whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. And when you follow that link, then you will see that this is my Patreon page and this is my Patreon profile. And when you scroll down, then you will find or you will see all of these are tiers, or these are levels: level 1, level 2, level 3. Okay, these two tiers or these two levels are same. The only difference is the geographical location. Okay, when you participate in either of these two tiers, then you will be getting all midweek update videos, okay, which I publish every Wednesday or Thursday, the technical analysis, video technical analysis, then the daily SP500 analysis, updates, movement, levels and zones, then the stock market opportunities, minimum 5 to 10 every week in the premium stocks of the US stock market. This, the third level or the third tier, is very special, because whatever you are going to get here, you will automatically get the same here in this tier also. Okay, but along with this, there will be a one-on-one Zoom meeting, one-on-one Zoom video meeting for up 2 or 3 hours. What I'm going to tell or what I'm going to teach in this the Zoom meeting: the entry and exit secrets, when to enter, when to exit for the maximum profits. Okay, one premium hack. Okay, this hack works almost 100% of the time with almost 100% accuracy. Then one trading or options strategy. This strategy works almost 100% of the time with almost 100% accuracy. Then the modified technical indicators. Then the options premium calculator, because more than 97% of the people or 98% of the people, they do not know how to calculate the premium value and they are trading blindly. Okay, that is the major reason for the losses. Okay, but I will show you how to calculate the premium value. There will be live calculations. Okay, and through this you can calculate the past, present and the future value of any option. So in this manner, this the level 3 is very special and will give you much more than what you can expect. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months and years, and they are getting these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire market every day from Monday through Friday. And they are very well aware of what is happening, what will happen, and they are not falling into the traps. So guys, whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community and you are welcome. Now guys, I'm going to discuss the third and the last point of the agenda of this S&P 500 weekly technical analysis. And here I will give you the probable movement of the S&P 500, Dow Jones and in a manner to the entire market, okay, for the next week. So guys, once again, if you have skipped the daily chart section and the weekly chart section, then it is recommended that you should watch the daily and the weekly chart section so that you can understand, okay, whatever I am going to tell here. Because in the weekly chart section, I have discussed the gold and the oil also, along with the technicals, okay, and why it is 75% bearish, why it is 90% bearish, okay, why it will be an opportunity and a trap, okay. Now here, through the numbers, but before that, on Monday, Goldman Sachs will post the earnings in the morning before the open of the market. And this will influence the open, especially the Dow Jones, if there comes heavy deviation, because Goldman Sachs is one of the primes. Then on Wednesday or Thursday, the United Health and also the Morgan Stanley, okay, means in this the entire week only the constituents of the Dow Jones, will post the earnings. The constituents of the S&P 500 will post the earnings in the next week. That will be the week of April 21st. This means whatever is going to happen in the next week, it will happen in the Dow Jones and through the Dow Jones in the entire market. Okay, because top two constituents, Goldman Sachs and United Health Group, okay, these two are going to release the earnings. It will influence the movement of the market heavily. Other than that, on Wednesday, the retail sales data will be released. Okay, this can also influence the movement of the market. So these are the key factors that will influence the movement of the market. Okay, Now, in terms of the numbers, what we know is that S&P 500 closed at 5363. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And so far, if you have liked this video, then hit like to appreciate. So in terms of the movement, what we know is that S&P 500 and also the Dow Jones is struggling at this the moving average. This means a gap up open. I'm not saying heavy gap up open, a very little like 0.10% or 0.15% gap up open. Okay, it will help both of these the indices to clear and to open above the moving average, and then because the bullishness is already there, market will be in a condition after that kind of open, it will be in a condition to sustain at the moving average. Once it sustains at the moving average, then where it will be heading to? In that case, it will be allowed to move up more towards the next moving average that is there in the 552x or 3x. Okay, somewhere around 552x or 3x. Okay, but now if you notice, yesterday the closing was 5363. Okay, from 5363 to a movement to this, the moving average will be around 3%. Okay, considering the last week movement intraday 10%, 11, 13% intra-week movement 13%, 3% is nothing. Okay, S&P 500 and the Dow Jones can easily gain this the movement. Okay, so that's not a problem. Okay, so exactly when the S&P 500 will be able to gain this movement, it will actually depend on it will be very much clear on Monday. Depending on the movement on Monday, it will be very much clear that in the entire week, okay, where the S&P 500 will be heading to, okay, how soon it can test the moving average, okay, and the same is applicable to the Dow Jones. On Monday, it will be very much clear. Okay, so in my midday update, otherwise in my final update on Monday, okay, I will clear this that out. Now comes this the movement. Yes, the bullish cycle. If all goes well, I'm considering a case wherein if all goes well and in favor of the stock market, then what will happen? In that case, the bearish crossover in the moving averages on the weekly chart. The moving averages are somewhere around 5-6xx. Okay, next week it is expected to be in 5xx range. Okay, and it moves up. This moving average is also in 5xx range. This means that the 5 somewhere around 555x 555x, there will be a very heavy zone. This zone will be built by the moving averages, the cluster of the moving averages, and also through my calculated levels, my calculated support levels and resistance levels. Okay, so we can expect a failure in the 55xx range, somewhere around 555x. Exact number or the exact zone, okay, I will mention in the pre-market analysis and in the midday update. Okay, so you need not to worry about that. Okay, this means that as of now, the bullish movement in the S&P 500 is allowed to happen. It is allowed to happen. That's not a big deal. It's perfectly okay. Okay, but to have what will happen to what? It is allowed to happen to around this the moving average. Okay, and the low of this candle was 5505. 5505. So reaching from here to the low of the candle, then comes the moving average, then comes the moving averages on the weekly chart. Yes, 55xx range. Okay, around 555x. Okay, so there will be a zone. I will clearly define the zone once it trades in the 54xx range. Okay, I will mention the zone. Okay, and then you can trade accordingly, because it is eventually it is expected to fail at the zone. Okay, and then to come down. So for now the bullish range is there. Now yes, one more thing. If let's say if all goes well in a manner that he comes up with some new idea, okay, or something new, and he says that I'm going to pause the tariff for 120 days, okay, or for 6 months, okay, or I'm going to reduce the tax rates further, okay, something like that. Okay, so he comes up with this the news. Okay, all of a sudden the news comes there. Okay, market moves up. Then in the best to best case scenario, okay, how far the market can go, can move up? 564x. That's it. Okay, because around the 564x, there will be the 61.8% fib retracement level, considering this low, and the high was on 19th of February, that was 6147. Considering that high and this low, 61.4%, and then comes my 564x. Okay, so that will be the best to best case scenario. Okay, provided that the market manipulators, they push the market heavily up. Okay, otherwise technically the market is allowed to move to 55xx range, right? But this 55xx range is an opportunity for the bears to short, okay, because this will be the lower high and then eventually it will come down. Okay, this is a blessing in disguise. Now whenever it comes down, then this fall will be limited. Okay, so just like yesterday, this fall will be limited. This fall will be limited to the 52xx range. Okay, now this time the 5264 won't be able to help much. Now there will be a new range because it will be coming down in this manner. When it was moving up, 5264 was there, but now it will be coming down, it will change. Okay, when it comes down, I will mention that range, exact number. Okay, but yes, definitely it will be 52xx. So for now, this is the bullish movement to happen. 539x is the key. It is the key. Okay, 539x. S&P 500 must recover, must gain, must close above at least two closings above 539x, so that more bullish side, okay, it can be confirmed and it will be allowed. One more thing, this 539x is not alone. 539x is then supported by 542x. Okay, this range. Okay, although it's a big range, okay, around 20 points, okay, or so, but still, because of this heavy volatility, okay, once it sustains and closes above and keeps on closing above, okay, this zone, then the movement to 55xx, and in the best to best case scenario to 564x will be allowed. Okay, and in that case the fall will be limited to this zone itself. Once the S&P 500 loses this zone, then only the 52xx range will come into the picture. Otherwise the fall will be limited to this zone. Okay, this is the bullish side. Now comes the bearish side, but before that, okay, Dow Jones must also be considered, because now in the case of the Dow Jones, 408 82x 82x slash 5x. Okay, this is the zone. So for the Dow Jones, so the Dow Jones must clear, must sustain, must recover, and must close above and keep on closing above the zone, so that the bullish movement is allowed in the Dow Jones. So this zone is for the Dow Jones in the bullish side, whereas that zone 539x and 542x is for the S&P 500. The same zone will act as a barrier between the bulls and the bears. If the S&P 500 fails to clear the zone, remains below the zone, keeps on closing below the zone, then it will remain in the bearish side. Similarly, if the Dow Jones fails to clear the zone, remains below the zone, okay, there is one more level, that is in 40,000 5xx. Even before 40,000 82x 5x comes into the picture, 40,000 5xx is there. Okay, remains below the zone, remains below this mark, remains below the zone, closes below this mark, means below, means it fails to move up and closes over. Okay, this is the barrier. Then what will happen? Then it will remain bearish. Now, if the S&P 500 remains bearish, then what will happen? In that case, the bullish retrace to the cluster of the moving averages on the weekly chart. Okay, it will be delayed. It will be delayed by 1 or 2 weeks. Okay, then it will come down. It will come down to 52xx. Okay, will sustain at the zone that is there in the 52xx. Will recover from 52xx. It will again have to struggle at this zone. Will clear the zone. Will be moving to the moving averages. But by that time, the moving averages will be in 54xx or somewhere around 5,500. Okay. If it fails to sustain at the 52xx, this is the zone, then it will have to complete its cycle to the 506x or 7x. There is the zone. It will have to come down to the zone. That will then further delay the bullish retrace to the cluster of the moving averages. But now one thing is clear, that fall from here. Okay, as of now, yes, one very important thing I forgot to tell you. So just listen carefully. Because of this, the formation of this heavy bullish candle, and the formation of the heavy bullish candle on the weekly chart, the market is now in a condition, sorry, no, it is not in a condition, but it has now come out of the saturation. This is what we know. This means that if there comes fall, then the fall is allowed to happen continuously. 4, 5, 6 bearish candles are allowed every day, fall and fall, okay, before the market hits the saturation level again, right? This means that if you think that there is 1 or 2 red candles, okay, and then it will saturate, no, it needs a minimum of 4 to 5 days minimum. Okay, when I say minimum, I mean continuous fall. Every day there must come red candles, then only 4 to 5 days it will hit the saturation level again, and then it will move up. Okay, so this means that if it fails at this barrier, okay, let me clear this picture again. This means that the S&P 500 fails at this barrier, okay, moving up, and then fall. In that case, this fall is allowed. Last time it missed the target, that was 4, 7, 8x, 9x. This time it will be coming down to that target. Okay, by the time it reaches to the target, it will saturate. If every day there comes normal fall, 1%, 2% fall, it will coming down, and then eventually it will retrace in this manner. Okay, let me draw the picture again. Okay, means see this kind of movement. It was coming down, up, and then down, and then up. This kind of movement will be there. Okay, this means that this is the very strong barrier, between the bulls and the bears. Just be careful. We need 2 consecutive closings above the barrier. Okay, exact numbers I will share in the pre-market analysis on Monday. Okay, but for you it is just 539x, okay, 542x. Okay, so exact range will be mentioned in the pre-market analysis on Monday. Okay, and we need 2 consecutive closings. Okay, then only bullish. Once it goes bullish, then any fall will be limited to the zone itself. If it fails, remains here, then any bullish retrace will be limited to the zone, and there will be more fall. So the movement is very simple. You just need to know, okay, how it is going to work. And one more thing, remember, market is now bearish. Whenever there will be any confusion, market will immediately fall. It will realign itself to the bearish side, because it will realign itself to the trend, and the trend is bearish, and this is how the stock market works. But on Monday it will be very much clear through these updates. Okay, pre-market, and by the time midday update, it will be quite clear where it will be heading to, whether bullish side, whether bearish side. So if you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. And guys, one more thing that I forgot to mention here, the gold is moving up, right? Gold is heavily bullish. If gold moves up further and the stock market also moves up, then either the gold will fall or the stock market will fall. Okay, and there will be a sudden fall. Okay, either this sudden fall will be in the gold or this sudden fall will be in the stock market. Okay, but this will happen. Okay, it cannot keep on continue. Okay, means there's a bullish movement. Okay, is not allowed at the same time in the stock market, in the gold, and also in the oil. Everything cannot move up, okay, simultaneously. Eventually it will fall. It will suddenly fall. So guys, once again, if you have liked this video, then hit like to show your appreciation. And if you want to remain in the winning side, okay, during this the recession, then you can participate in the S&P 500 knowledge transfer program, because whatever I know, I am going to teach you through this program. So while the others will lose, okay, you will gain. So I've given the link to this Google spreadsheet in the description of the video and also in the comment section.